Over the last 2 months, with economic uncertainty, the bond market has responded, and the yield for the 10-year Treasury has declined by 60 basis points from 4.8 to 4.2%. The 30-year fixed mortgage has followed suit, recently falling as low as 6.75%. That's the lowest level since mid December. It's quite obvious that stubbornly high mortgage rates slowed down the early season home buyers here in the first quarter of 2025. Our weekly pending home sales data continues to run about 3% fewer than last year. This is after Q4 was 5% above the previous year. So that's a pretty notable swing. So mortgage rates have been declining for several weeks now. In fact, mortgage rates are cheaper than they were at the same point a year ago. And now, as always with swings in the cost of money, we watch for signals of home buyers taking advantage of opportunity. If we're lucky and mortgage rates keep falling, the question is, will we be able to measure any turnaround with home buyer demand soon? Unfortunately, I think we're a ways off still from a meaningful shift in the housing demand trends. Last year, as rates eased down from 7.5 to 6.5%, I expected some improvement in demand, but we really didn't see any change in the buyer demand metrics until rates got closer to 6%. Last week at HousingWire's Housing Economic Summit in Dallas, I shared the data on why I expect that same 6% threshold will be what we're facing in 2025. The added wrinkle this year is that lower rates are being driven by weaker assessments of the economy and jobs. By some measures, the US economy is slowing dramatically right now. The Atlanta Fed's GDP Now data, for example. A slower economy probably leads to cheaper mortgage rate, but it also means fewer people are employed and incomes stop growing. So in the last 3 years, everyone's been employed in this country. We've had super high employment. So when mortgage rates move cheaper, potential home buyers are fairly optimistic about their personal situations and they jump to take advantage. So this is what happened last September, for example. But now, if mortgage rates move lower because unemployment spikes and the economy shrinks, then it remains to be seen how much a 50 basis point decline in mortgage rates motivates people in a more pessimistic macroeconomy. So the people have to balance the cost of money with things like job security when they're buying houses. So the thing to keep in mind for the housing market as we roll into March is that mortgage rates have been easing down. The real time data, sales data that we track does not yet show any response, however. In fact, as of February, the sales and home price data continue to look very weak, even compared to the lows of 2024. Okay, so let's look now at this week's data and see what we can see. I'm Mike Simonsen. I'm the founder of Altos Research here at HousingWire. And let's take a look. Let's start with the active inventory of homes for sale right now. So the total available inventory, in fact, dipped this week to 639,000 single family homes on the market. You can see there are 28% more homes on the market now than a year ago. That's the purple line in this chart. It's 2025. And you can see that nationally, there are plenty more homes unsold on the market than in 2024. During the second quarter last year, inventory rose quickly because mortgage rates rose quickly and peaked in May. So this year, if we're lucky, mortgage rates will continue to ease down. So while there are 28% more homes on the market now than a year ago, by the end of May, the spread could be down to like 22%. So inventory grew faster this last year. When we usually focus on the single family data in these videos, but it's worth pointing out that the unsold inventory of condos and townhomes is 33% more than last year at this time. So there are 193 condos and townhomes on the market across the country. That condo inventory has been growing slightly faster than single family houses. And while single family listings are still 22% fewer than February of 2019, 22% fewer, the unsold inventory of condos is roughly back to the old normal level. So in February 2019, there were 194,000 condos on the market. There's 193 right now. In fact, you have to go back to 2016 before you can find a year with consistently more unsold condos than we have now around the US. And while the available supply of single family homes shrank a little bit this week, the inventory of condos grew by 1%. So here's what's fascinating: 36% of all condos and townhomes for sale in the US are in Florida. And there are a lot of Florida condos on the market. Of the 194,000 condos on the market in the US, 70,000 of those are in Florida. In most of the country, condos are a pretty small percentage of the market. Single family homes dominate the market, but it's worth checking in on the condo data every once in a while. So, new listings also dipped this week for the second week in a row. So, there's probably some weather effects and stuff in here. I expect to see a jump in the new listings volume next week in next week's data, but there were just over 53,000 new listings unsold, plus another 10,000 new listings that are immediate sales this week. That comes to 2% more unsold new listings and actually 5% fewer sellers overall than in 2024. That's three of the last 4 weeks with fewer sellers now than in 2024. So in this chart, we're looking at the unsold new listings. I like this view because even though there are actually fewer sellers overall, more of the listings are actually adding to the active inventory. You can see that purple line here is just tracking just a little above last year, the blue line from last year. Each week, a few percent more houses than we saw a year ago. So the important takeaway from the new listings data is what it's not doing. There are simply not a lot of home sellers across the country. Even in the slowest markets in the country, like Florida, for example, there are still plenty, while there are still plenty of unsold homes on the market, there's not a lot of like a rush of sellers adding to that. And that fact keeps a lid on inventory growth across the country. Now, as we roll into spring, the weekly home sales should start climbing. This week, we saw the most newly pending sales all year, but sales are still trailing last year. So there were just over 60,000 newly pending home sales for single family homes this week. It's up almost 7% for the week, but it's still 3% fewer than the same week last year. 3% fewer home sales are happening than in 2024. Sales should climb this week now through the Easter holiday week. Easter is late this year, later in April, so that's something to note for the March data as we watch that March numbers roll in. In the chart here, we're tracking the real-time counts of the newly pending home sales each week. The purple line continues to show just no growth in sales activity versus 2024, and you can see that we should expect some, rapid growth over the next few weeks in home sales for March as the spring season warms up. There are 324,000 single family homes in contract to sell right now. That's 3.75 more than last week. Uh, it is still running 3% fewer total home sales than last year. So a lot of sales close right at the end of the month here. So next week we'll see a dip in the total pendings, even as the weekly sales numbers increase. So the takeaway from the pending home sales numbers is that it takes roughly 35 days on average for sales to close. So the homes in contract now will generally close in March. And we know that there are fewer homes in contract now than last year at the end of February. So we have visibility that home sales for Q1 2025 will come in below Q1 2024. That's counter to our forecast for the year. Back in the fall, when we published our HousingWire forecast, we were expecting slight home sales growth for 2025. Sales could still improve slightly this year if mortgage rates continue to fall, but that change has to happen quick because Q2 is the seasonal peak for home sales. Home prices. So the median price of those newly pending contracts came in at $389,900 this week. 389.9. That's a bump up of 1% for the week and is just 2.6% greater than a year ago. So you can see the purple line for 2025 is in its seasonal climb. the best homes and the most buyers are here, so in the spring, so that prices inch higher. Given the season, I expect prices to step higher in the next few weeks, but there are a lot of signals of price weakness in the data and low buyer demand. So I would not be surprised if we get less seasonal lift than is usual in March. So this is the national median price. All the homes in the country that got offers this week and went into contract. Nationally, prices are slightly ahead of last year. Some markets have higher home prices. Plenty have lower home prices than the spring of 2024. I mentioned condo inventory is climbing faster than house inventory. Condo prices are weaker too. Nationally, condo prices are unchanged from last year. In Florida, the median price for the condos newly in contract is 4% below last year for the state of Florida. This is important because local markets can behave differently from one another. There are many years when things are moving in concert, but right now we have some markets have plenty strong price appreciation while others have falling home prices. The leading indicators for future sales prices continue to be pretty weak. No sign of any turnaround in the price reductions, for example. The percent of homes on the market with a price cut from the original list price is 33.7% now. That's up 50 basis points on the week and is pretty notably higher than last year at this time. You can see the blue line from last year. In the chart here, the purple line is for 2025 and has quite an obvious trend. There are more homes on the market now with price reductions than any recent February. All these gray lines are past years. New listings are pretty low, so there's not like a lot of fresh inventory. Fresh inventory doesn't need a price cut for a month or more. Withdrawn listings are pretty high too. For homes that are on the market that don't get an offer, you can try to cut a price to stimulate demand, or you can withdraw the listing and hopefully test the market again in the future. I was looking at a San Francisco condo this weekend. It's listed for 15% less than it sold for in 2015, 10 years ago. It's been withdrawn and relisted at a lower price 4 times in the past year. Sometimes sellers are trying to game the system with a withdrawal. So on most MLSs, if the property's been off the market for like 30 days, that'll reset the days on market and the original list price. In the Altos data, we track total days on market. So while this condo is officially a new listing, in the Altos data, we show nearly 400 days on market. At some point, this property will be a buy. It's a super cool space. So it'll be fascinating to see the price point. Okay, that's all the data we have time for today. If you need to communicate about this market with your buyers and sellers, you should join us at Altos Research. Go to altosresearch.com. You can now sign up for a free Altos account to get your local data, get a free report. Uh, we'll help you dive into that local market because local markets may be behaving very differently around the country. So that's how you start helping people understand this market today. So go check that out. Link in the description below. See you next week.